So two of the largest banks in the world have forecasted a US recession coming at the end of this year and into 2024. Dutch Bank is so confident in their claims that they also gave a 100% probability of a US recession, citing concerns over inflation, aggressive interest rate hikes, and the potential consequences of policy-led boom-bust cycles. British banking giant HSBC Asset Management also agreed with Dutch Bank and has warned of a US downturn in the fourth quarter and a subsequent year of contraction, followed by also a European recession for the year of 2024. So with what it seems like, with stocks continuing to make some unprecedented market moves and crypto not really doing too much this week, let's break down all the updates that you need to know moving forward. Also, yeah, got my tea. Because ladies and gents, I don't know if it's like the wildfire stuff. Maryland looks like it's in another huge fog. And my throat. So anyways, it's been a slow week for Bitcoin as it's only up about 0.1% compared to what we saw last week where Bitcoin actually spiked up about 20%. Earlier this week, Bitcoin experienced some temporary dips below the crucial $30,000 support level on both Monday and Wednesday, but was able to quickly recover this week above that support level. So since Bitcoin's pump from $26,000 all the way to $31,000, we saw a little bit of a pullback, but right now I think this is a healthy pullback because we're seeing the price consolidate, especially after we saw heavy movement happening last week. In addition to that, though, we haven't been seeing too many other major market movements happening from some of the other altcoins. Ethereum is still sitting at around $1,800, and prior to this week, we actually saw Ethereum having a bit more higher gain, even approaching that $2,000 price level once again. Going into the largest 24-hour winners, Compound is actually up about 25%, and going into the largest losers, nothing is getting wrecked today with the top 100. Nothing crazy, nothing parabolic like what we saw last week. So I'd consider that to be fairly decent news. So as I mentioned earlier in this video, this week we've received conflicting information with some data suggesting that a recession is coming soon, while right now it's saying that some reports are showing the complete opposite. As an example, Dutch Bank is anticipating slowing consumer spending with a rise in the unemployment rate and no interest rate cuts happening until March 2024. In the midst of that, the recession is also hitting some companies sooner, where Robinhood has announced its third round of layoffs in just over a year, where they plan to remove an additional 7% from their total workforce. This also comes after they removed about 9% of their staff in April and 23% of their staff in August of last year. To contrast that, we actually had reports that the US GDP revised up to 2% in third estimate, exceeding its consensus. So back on Thursday, we got a final revision for the quarter one GDP, and it showed that the US economy had stronger than expected growth during that quarter. So they went ahead and increased it to 2% annual pace from the previous estimate of 1.3%. And the change came in large part because both consumer expenditures and exports were stronger than previously thought. So this revision here has brought some more optimism into the markets, and among some economists and analysts claiming that a future recession might not actually happen or be as severe as it once was anticipated. So we're in a really interesting position with the economy right now. We have, as an example, Yellen, who says there's no recession, and then the federal government who's saying brace for impact. Even just a few days ago, Powell stated a recession is not the most likely case, though it is possible. I like what this one user over on Twitter called Fluent in Finance had stated, and he said, "Are we headed for a recession? The US economy is in a weird place. The leading indicators of a recession have been declining for 14 months, but the economy has not yet entered a recession, and this has never happened before. Jobless claims, building permits, and new manufacturing orders have been bad for a very long time, but we're still not in a downturn. The Dallas Fed's banking survey shows that loan demand is down, non-performing loans are up, and jobless claims have been rising since last fall." Now, I'm curious to hear your thoughts on whether or not the recession is coming up. It seems like right now we're really on a 50-50 split. People are not sure what to anticipate. I could really see it going both ways as well at this point. For me personally, I think this summer is going to end on a strong note with stocks continuing to rise up in price, but I don't doubt that Q3 and Q4, things could end up being a bit more different, where assets might plummet and we might see that market correction. Now, by the way, on Wednesday, the Federal Reserve's annual bank stress test was done. And for anyone who is not aware of what this test entails, here's what it means. So basically, bank stress tests have been carried out every year since the 2008 financial crisis. And to do this study, they use hypothetical situations to see if a bank has enough money to handle handle a bad economic situation or another upcoming severe recession. In this year's stress test, the Fed tested a severe global recession scenario, which would cause 40% of the commercial and home property to decline in price with a 10% unemployment rate. According to this study, the federal government has determined that all 23 of the country's largest banks would go ahead and be able to survive a severe recession, but I think it's better for you guys to know the truth. So although you might see a bunch of headlines on Google, on Yahoo, on CNN, whatever it may be, that this stress test points out that we are in a good position, you have to realize that there are 3 reasons why this study is actually heavily flawed. So first of all, the stress test doesn't talk about small, medium-sized regional banks. This pretty much doesn't paint the full picture, because if you look back at what we saw happening with the banking system this past year, it wasn't actually the huge major 23 banks, but it was a lot of these smaller, high-profile banks such as Silicon Valley Bank, Signature Bank, Silvergate Bank, First Republic Bank, and 3 out of the 4 largest bank failures all happened within this year. Now, if these banks couldn't even survive on their own now, why would I believe that these banks could survive a severe recession with even higher interest rates? Now, the past 4 months, it hasn't even been just like $1 billion, $10 billion, but it's been $100 billion so far this year in propping up small and mid-sized banks from collapsing. Out of all that, this stress test also only tests a hypothetical scenario which involves a decline in real estate prices. But if we look back at what we've seen happen with bank failures, it wasn't all just real estate. We've seen a collapse coming from a decline in securities and rising interest rates, and I'd be willing to bet that not all 23 major banks would have passed this year's stress test if they gave a scenario of a 40% decline in, say as an example, stock prices. So I think this test was a way for the Fed to instill trust in the banking system. It's kind of like for a teacher to give a test to the students, knowing that the questions were super easy and that they would pass them anyways, in order to report to the principal that things are going to look good and that the kids are still learning more valuable information. I personally believe for this to be fair, the stress test needs to be updated to account for factors such as a decline in securities, crypto, or things, just outside of real estate. What's funny about this whole situation though is that the federal government already knows this, guys. And Powell even quoted yesterday, quote, "The bank runs and failures in 2023 were painful reminders that we cannot predict all of the stresses that will inevitably come with time and chance. We therefore must not grow complacent about the financial system's resilience." So pretty much he's saying that the stress test that they did doesn't actually mean anything. Now, going into some more broader news, beginning on July 15th, Kucoin is implementing a mandatory KYC system upgrade to enhance compliance with anti-money laundering regulations. For those of you who are unaware of KYC, this pretty much just involves a process of providing more personal information, identification information, and lately they do also facial recognition to make sure that it is you who is applying to use their brokerage. Now, KYC has been around for a very long time. If you sign up for any brokerage, even within the stock market, you're going to have to go through this process. What's interesting about this story, though, is the fact that Kucoin primarily operated outside of the US. They weren't focused on this market here at all. But in this instance, they're still moving forward with laws such as this governing the account security of other individuals. Now, by the way, on the topic of KYC and brokerages, if you guys also want to go ahead and pick up a bunch of free stocks and even use some of these platforms that allow you to trade crypto, check out Webull and Moomoo, link down below in the description. Now, by the way, this offer here from Moomoo ends June 30th. So depending on when you're watching this video, it might be too late, but right now you can still take advantage of getting 17 free stocks after depositing $100. Now, if you decide to put in more than that, like $1,000, you're gonna get 16 free stocks and $100 cash reward. And if you happen to put in $5,000, you'll get 16 free stocks, $100 cash, and also 1 free share of Tesla or Google. Now, Moomoo is in good standing with the SEC and FINRA and is also FDIC insured for up to $250,000. Not only that, but Webull is also offering up to 12 free fractional shares in stocks after you register and open a new account. For me, the gameplay here is simple. Get these free stocks, open an account since they're completely free anyways, and you can always cash it out and transfer your money back into your checking account if you happen to not use it or not like it for whatever reason. Moving forward over into some pretty solid news, MicroStrategy, led by Bitcoin advocate Michael Saylor, has now acquired an additional 12,333 Bitcoin, bringing the company's total to holding 152,333 Bitcoins. This latest purchase was made at an an average price of $28,136 per token, with the company's Bitcoin stash now worth around $4.5 billion. So MicroStrategy's Bitcoin's cost basis now stands at $29,668. And this means technically, with Bitcoin sitting above $30,000, they are actually in the green right now. So with news like this, I believe it's pretty good news. I remember during the bear market when Bitcoin was sitting around like that $16,000 level, wow, people were coming after Michael Saylor. So, you know, for the good times and the bad times, you got to go through it. And looks like right now he is still coming out as a winner, and he is continuing to double down on Bitcoin, which makes me a bit more bullish on what's to come out in the future. Now pair that up with the next headline, and it's the fact that Fidelity is now readying their new spot Bitcoin ETF filing. So in last week's update, we talked about how banks were FOMOing into the spot Bitcoin ETF craze after what we heard from BlackRock. Well, just like what we predicted, we have financial giants just like Fidelity saying, all right, roll it up, let's get in there. Basically now they are filing an application with the US Securities and Exchange Commission for a spot Bitcoin ETF. This also includes other large financial institutions like WisdomTree, Invesco, VanEck, ARK Invest, and Bitwise, which they have all filed applications as well within the past couple weeks. Out of all those, Cathie Wood, ARK Invest, filed an application for a spot Bitcoin ETF back in April, but they went ahead and amended it to look just like the BlackRock's version so they can go ahead and have a greater chance of approval. This is good news, and the one date you want to look out for is going to be August 13th, 2023, because this is the decision date for ARK's application to get approved. We don't have any other confirmed dates like for BlackRock, but if August 13th is going to be a day where we see Bitcoin ETFs getting filed, expect some volatility and maybe a start to a new bull market. Who knows? Last but not least, Coinbase went ahead and sought dismissal of the SEC lawsuit claiming extraordinary abuse of process. Now, if you guys are watching this video, you'll know the SEC, we don't even have to say it. All right, the SEC is the SEC. We need some more justice happening within the US government. Basically, a recap on the situation. We covered it a few weeks ago. The SEC started a lawsuit against Coinbase claiming that they have 12 different unregistered trading tokens or securities. This includes Solana, ADA, Matic, known as Polygon, Sand, and a few others. And Coinbase right now is arguing that the SEC is continuing to overreach its legal authority. They are violating the company's rights. They have also approved Coinbase's registration statement back in 2021, but now they're contradicting that completely, saying that, okay, you were able to approve it back in 2021. Now that they're saying we can't. It's a whole bunch of bogus, mogus, dogus. What we know now is that the SEC and Gary Gensler has made it even more difficult for companies to find clarity within this space. Right now, Coinbase is trying to get this legal claim thrown out because, guys, there's a lot of injustice happening. There are a lot of lawsuits without merit going on. And even with Coinbase, I hope that things are able to work out because we're continuing to push crypto companies and businesses further out of the US. Now, that is pretty much the main news for this week. Hopefully next week we get some more market movement happening. Just a reminder though, over this past week, we opened up to 100 spots in our Patreon and it's been selling out every single time. So if you've also missed your chance to make it inside our group, be sure to check out the link down below in the description to join our waitlist. Right now, memberships are sitting at just $14.99 a month, but we will be raising prices soon in the future. And if you get in now, you'll be locking in the lowest rate it will ever be, and you get full access to our Discord community. You'll also get exclusive market updates happening 3 times a week sent to your email inbox and notified into the Patreon app, and you get a lot more than that. We also recently gave away over $1,000 worth of Trezor cold storage wallets away to our members, and we'll have even more giveaways happening in the future soon. So if you guys want to go ahead, pick up those free stocks and also secure a spot within our Patreon, be sure to check out the links down below in the description. Now, thank you all so much again for watching, and stay tuned for our next market update coming out every Friday on this channel. Peace.